All right, today we're here with Shamir Karkal. He's the founder of Simple Bank and currently the founder of Sila. Thanks for joining us, Shamir.
Thank you, Justin. My pleasure. And actually, on both of those, I was the co-founder. Thankfully, had really good co-founding teams, both at Simple and now at Sila, which is of course a blessing.
Could you tell us a little bit about your background, both personal and professional?
Sure. So you might guess from my accent that I'm not an American. Well, not natively American at least. I'm from India. Grew up in Bangalore, and became a software engineer in the late '90s, and came. We actually spent some time in Japan, but ended up coming to the US in 2003. Originally, it was only supposed to be for like 6 weeks to launch a project that I was working on for a client here in the US. But eventually, like that project got launched, but there was other things to build, and the client wanted me to stay. So I finally ended up quitting and going to business school at Carnegie Mellon in Pittsburgh, and went to business school. Learned a lot more about how the world of business works than I ever knew as a software engineer. And again, went to Japan as a summer intern, but then decided investment banking wasn't for me. So I stayed in the US and became a management consultant. Did that for a couple of years in the US, then took a transfer to Brussels. And I was actually based in Brussels in Belgium when a classmate of mine from business school sent me an email suggesting that he and I should start a bank together. And the way that came about was that was Josh Reich, my co-founder at Simple. He and I met at business school. He lived down the street from me. We became good friends and stayed in touch. He went off into the startup world. I went off to be a management consultant. Ended up serving almost exclusively financial institutions of one type or the other, not by plan, but that's just how consulting works, right? And so became a little bit of an expert on finance. And so Josh, as a startup guy, got frustrated with his finances personally and was trying to figure out how to manage his finances. And then finally was like, well, this sucks. Why is this so hard? And realized that the real problem was the banking industry and banks. And came to the kind of the realization that banks suck and that he should really build a better one. And then I was the closest thing to a banker that he knew. So, I was his first call, first email actually. When he emailed me, I was a little bit surprised. I was like, what got into Josh? But then I got fascinated by the vision and sort of the idea of building a new type of bank that was actually customer centric. That was designed to be simple and easy to use for customers who lived on their mobile phones, not trying to force everybody to walk into a branch. And it was so different from anything that I had experienced with it. I really wanted to see, could we build it? And so ended up doing, the classic entrepreneurial journey, moved from Brussels to New York, quit the consulting lifestyle. And in late 2009, I and Josh started up Simple. We added a third co-founder, a guy called Alex Payne, and built and launched Simple, which was a long, complex, arduous journey. From that original email to actually launching Simple took 3 years. And the 3 years wasn't spent on building a web app or a mobile app. It was spent mostly in finding bank partners, finding processors, figuring out how to connect them in an era where most bankers did not know what the word API meant. And then, finally figured out how to launch it. It didn't really take us long to get to product market fit. We had to work on it after launch, but not really that much. It's like 6 months and less. And the reality of it is that banks suck, and most customers give them a half decent alternative and they will leave. And so we got to a decent amount of product market fit, started growing nicely in 2013. And then in 2014, Simple was acquired by BBVA, which is a large global bank. And really the vision for us was that with a bank partner which had a lot more scale and a lot more capabilities, we could actually build simple and really take it and sort of make it much much bigger, right? uh, that kind of didn't end up happening the way we thought it did. In 2015, about a year after the acquisition, I left Simple and moved to BBVA, which is the parent bank, and spent a couple of years building API platforms for them. I really wanted to make it easy for the next Simple or the next Josh and Shamir and Alex to build many more simples and digits and Venmos and squares and whatever, right? And not spend years just getting the product to market. uh, and and that was the vision of the open platform at BBVA, which I ran, which built and launched really. But I could never quite get that vision to reality. We built the tech platform, but I could never get risk, compliance, legal, and strategy at BBVA to really work together to onboard small companies. BBVA is a great partner for a Uber or an Alibaba or an Apple. They're not a great partner for two guys in a basement in Brooklyn. That was frustrating for me because those were the customers I wanted to serve. And so then I got frustrated, left BBVA in 2017, started trying to figure out what to do with the rest of my life, uh, and realized that I still wanted to solve this problem. I still wanted to make financial innovation easy and make the financial system programmable so that programmers could really build and ship apps with money as as easily as they build and ship apps with like email or any other messaging system. And that I started looking at crypto in 2017. It was so much innovation has happened, and there's been several booms and busts by now. And I was like, can we use a crypto backend to instead of like a banking backend to build a new financial system really? And the answer is not quite. There's a lot of really cool functionality in blockchain platforms generally, and there's a really interesting sort of developer ecosystem building around it. But the blockchain platforms themselves and the main crypto platforms they're all still very very small scale, right? Like they don't scale, they don't have stable currencies. And when it comes to programming with money, the important thing to remember is I love owning Apple stock, but I don't want to get my salary paid in Apple stock, and I don't want to pay my rent in Apple stock. So something that's highly volatile can be a great asset. It cannot function as money. And I really wanted to build a platform for programming with money. So started trying to figure out how to do that. And that's where Sila came together, right? Found my co-founders, put together a team, built it and launched it. And at its core, Sila is an API platform. We have REST over HTTP APIs to do ID verification of individuals and soon in businesses. We have APIs to do bank account linking so that you can securely connect Justin or Will or Shamir's bank account and get the routing and account number. And then we have APIs to do debits to those bank accounts and pull funds out of them, credits to those bank accounts so we push money into them, or transfer funds between Justin and Shamir and Will. On the back end, every time we pull money out of somebody's account, we issue tokens, which are an ERC20 token on Ethereum. And every time we push money into somebody's account, we burn those tokens, right? So the dollars that we take out of somebody's account go into a pooled account at our partner bank and just stay there. So Sila is an ERC20 token that's a stable coin. But even more important than a stable coin is really just a representation of the money in the underlying pooled account. So the money always belongs to Justin O'Connell or Shamir or whomever, the end user, but the tokens in their Ethereum wallet just represent the underlying dollars. And of course, there's always a 1:1 relationship. And that's the system that we built, put it into alpha in 18, did a beta, and then launched it a couple of months ago. We have, 4 or 5 customers in production now, and the couple more dozen customers behind them. And everything is looking up and to the right.
Is this US based or focused?
Yes, we do only ID verification, bank account linking, and ACH payments in the US. We eventually want to make it international. We'd like to link every payment system on the planet. I mean, I don't care whether you're holding dollars in a US bank account that you like to access via a debit card, or whether you are holding Tanzanian shillings in an M-Pesa wallet that you would like to access via your smartphone. I want to make it possible for somebody to get those funds, push those funds, and build some sort of application with those funds, and ship it to all those users.
You mentioned you moved to the US in 2003. Could you discuss acclimating to this new culture and any challenges you faced?
That's an interesting question. Let me think about that. The first night that I was in the US, I almost got into a fight, which was a surprise. I wasn't expecting that. It's funny because I landed in Washington, D.C. One of my colleagues uh, came and met me at the hotel and was like, let's go and check out the office, and I'll show you how the subway works, and let's get some dinner, and then you can go and sleep, right? So I was doing that, and then as we were walking to dinner, somebody was walking behind us and shouting racist stuff at us, and I didn't even realize. But a couple of the colleagues that were behind me got pissed off and started, like, the whole shoving thing, and I was just standing there wondering what is going on, and like, what is all this all about, right? And I was zonked from the 24-hour flight, and then eventually nothing happened, and then I went to dinner. I was like, what's going on, guys? Like, what happened? And they were explaining it to me. I was like, oh, okay. Oh, well, I mean, is it going to happen every night? And it's hilarious, right? That was my first night in the US, and it's never happened since. So it's like, it's one of my craziest nights in the US was my first night. But I don't think culturally it was a huge problem to sort of acclimate, because growing up in India and studying there, I spoke English and still speak English pretty fluently. The technology is technology. Java or any other programming language doesn't care where you come from. You just need to write it and ship it. And tech development cultures across India and the US weren't that different even back in '03, right? There's only a few ways to build applications that really works, and everybody quickly gets to them. So that wasn't necessarily a surprise. One of the big surprises for me was the US payment system. Kind of coming from India, I had this vision of the US as an advanced country full of like technology where everything worked great, and India was a backward developing country, right? And then I got to understand the US payment system and how banking works here, and I'm like, wait, what? I could go to a bank in India in 2001 and go to the website of the bank and tell it to pay anybody else whatever amount of rupees I wanted, and that wasn't possible in the US in '03. And guess what? It's still not possible in the US in 2019 with most banks. And now people use Venmo and Cash App and other ways of getting around it. But kind of the bank-to-bank retail experience of banking in the US was just, surprisingly bad for me back in '03 when I first landed in the country, and already worse than India in '03. But I just figured out how to live with it and moved on, right? Never really thought about it that much until Josh emailed me in '09. And by that time, I'd lived in India, the US, Japan, Belgium, and I'd seen another dozen countries, right? And I was like, wow, it's not just India versus the US. The US really does have the worst retail banking system of pretty much any developed and most developing countries.
What did you learn at business school that stands out to you most, having had a software engineering background?
Accounting, um, truly understanding accounting and sort of finance, um, you know, assets and liabilities of a business, and how to track them and all of that was very, very interesting for me, because it is really just another language with its own, you could think of it as a, as a kind of a weird programming language for programming these things called financial statements. But like all programming languages, it's trying to represent the real world, and understanding how it worked. And double entry bookkeeping has like centuries of history behind it, that I found super interesting and fascinating. And you'll see I'm pretty geeky, right? And then the other thing that really fascinated me a lot was economics. I think my deep love for kind of economic theory really came out of the courses I took in economics at Carnegie Mellon. And in fact, really one professor that really stood out to me, and I was this professor called Marvin Goodfriend. He probably one of the best professors I've ever had. He would just walk into the classroom with a piece of chalk and just explain everything on the board by drawing out equations. Never had to look at anything. He knew everything. And the reason he knew everything is because most of what he taught us, he had written the original papers and the theory behind it. And most of the reading was just reading his papers from like the 80s, right? And he was recently nominated to be on the Fed board, but he never made it and just passed away, which was a shock to me when I heard it. But yeah, I remember I took every class of his I could, spent some time, even years afterward, working with him and collaborating with him. But yeah, I moved to the West Coast, started a company, kind of lost track, and then now he's gone.
Well, I'm sorry to hear that. I'm curious,
And
what sort of economic theories resonated with you the most?
the economic history of the US was the part of it that he walked us through in his first course, with between kind of the creation of the Federal Reserve, the the Great Depression, the crash of 29, the Great Depression, the New Deal, the sort of the World War II, and then the long boom afterwards, and then the hyperinflation of the 70s, the Paul Volcker disinflation, and then the theory around kind of inflation targeting, and which is the modern accepted paradigm among central bankers for monetary policy, is you target inflation and you want to keep inflation low but positive, right? Like the 2% target of the Fed, or the 4% target of the RBI in India. Marvin was actually the one who wrote most of the original inflation targeting papers in the 1980s. So he was an economist at the Fed, right? So he had a unique perspective on all of it. He knew Paul Volcker and worked at the Fed at the same time he had, and had a lot of the stuff that went down between the savings and loan crisis, LTCM, all the stuff that happened in the 90s. He was actually there when it happened. And yeah, no, it was all fascinating to understand how a small group of people in the Federal Open Market Committee did their best to try and manage a financial system that moves, let's see, $250 a year or more, which is insane to imagine, but it does, right?
And as you speak of Paul Volcker, he passed away earlier this week.
As well, I know, and I had never met Paul, but through Marvin, I have a lot of respect for him and what he did. Kind of amazingly, sort of seat of the pants, right? Like he did the disinflation in the late 70s and early 80s. And then Reagan gets credited for the boom in the U.S. economy in the 80s. It's arguable that the real person who engineered all of that was Paul Volcker, and he didn't have a lot of economic theory to kind of guide him on it, right? It was mostly sort of his knowledge and instinct, and then people like Marvin wrote the theory afterwards and said, this is why Paul Volcker should have done what he already did. And let's create a framework to explain that. But when Paul did it, he didn't have a framework. So no, a lot of respect for that man.
Perhaps in some ways we're moving into a new era in the economic history of the United States. There's been a ton of discussion about stable coins. Libra has been in the headlines, and Facebook executives have been in Congress answering questions. I'm curious, could you kind of speak to this new, not trend, but technology of the stablecoin and how Sila approaches it and what you expect the future to look like?
Yeah. And I should mention that my co-founders at Sila are all smarter than me, and so was the case at Simple as well. And especially one of them, Alex Lipton, who has a PhD in mathematics and is a fellow at MIT. He's done a lot of research on this topic, and has written papers on it and stuff. So he's really the expert. But talking with him, I come to the realization that I'm not convinced there's any really new ideas in finance at all. They're all sort of old ideas, like kind of repackaged with new technology. So the idea of central banks directly issuing money to end users, or businesses, is not something that Facebook invented or even Satoshi invented. Or I thought it was invented in the 1930s as this thing called the Chicago Plan, which was one of the alternatives to the New Deal, and a bunch of economists at the Chicago Fed, at the Chicago University of Chicago School of Economics. They basically proposed that, instead of like having this fractional reserve banking system, let's just keep all money at the Fed. We have the Federal Reserve. It was relatively new in the 1930s, but now that it exists, the Fed can create all money. Banks can just be sort of front ends for the Fed, and if there's 100% reserves, there's no fractional reserve banking. There's no lending of deposits, and so really there can be no more bank runs, right? And that was the Chicago Plan from the 1930s. It was very hard. It was beautifully elegant, and you wonder why it wasn't implemented. But it was an era where there was no modern technology. So how on earth was the Federal Reserve going to track the balances of even 100 million Americans? It's impossible to comprehend. Back then, computer was a job description for a person who spent their entire day adding up numbers in a giant book called a general ledger, right? So it just wasn't feasible. But today, one company can track the photos of a billion people, and compared to a photo, which is a really complex artifact, which has is 2 MB or larger, financial transactions are very small and very simple. So compared to building Instagram, building something like a Libra is trivial, technologically speaking. In every other way, it is extremely complex. So you could build one central bank that banked all Americans or all adults on the planet, and just said, hey, we issue a currency. You want more currency, you just use us, right? You don't have to go through the bank. And if there isn't a bank that's doing fractional reserve banking, then the bank can't go bust, and you can't have bank runs, and sort of a lot of the infrastructure of modern finance is geared around that, right? So it could be a much simpler, a much more elegant financial system. What's really hard to imagine is how we get from here to there. The idea, in fact, is much older than the Chicago Plan. It goes back to a guy called David Ricardo in the 19th century, at least. So it's I think that's kind of the core issue here, right? It's not just that you know, it's not just that like sort of having a fully reserved stable coin is massively groundbreaking. It's really that if something like a fully reserved stable coin was to take off and start being used by, you know, whatever, tens of millions or hundreds of millions of people, what happens to the traditional banking industry? Because a lot of people, if you ask most Americans, they would much rather bank with Google or Amazon or Apple than with Bank of America. And if they don't need to, they won't. And if they find an easy way to get off Bank of America or off the traditional financial system, they might. And then what happens to the traditional financial system, right? It is just quite destabilizing if it happens quickly. And can't imagine any quicker way of doing it than having something like a stable coin roll out to like 2.5 billion people on Facebook. And I think that's really the core driver of sort of central bankers and regulators sort of push back against Facebook. It's not so much that they don't like stable coins or in fact, there's many central banks doing it themselves, not least of which is the People's Bank of China. It's just that they don't want Facebook doing it.
Where does Sila fit in with all of this?
Oh, we are, you know, the in the greater scheme of the financial system, we are the flea on top of like 6 more levels of fleas on top of the dog, right? Like we're so minuscule, we're insignificant, and that is helpful. We are very small and very early stage, but we are actually launched. We have real customers, growing volumes, and I'm not sure Libra will ever get to that point. So at least so far we're ahead of Libra. Um, the real goal for me is not necessarily um, to try and take over the world or sort of like, you know, or end up as the next Zuckerberg or whatever. It's really to help all those innovators, right? Like um, the experience of Simple taught me that there is way more potential for financial innovation than than I could have ever dreamt of in, you know, 2009. The biggest barrier that the is it's not that there aren't enough innovators or that somehow, you know, innovating with money is fundamentally different. What is fundamentally different is access. You can, you know, if somebody in Tanzania wakes up tomorrow and wants to build a gaming app, they can build it, put it into the app store, and in a couple of months they can ship it to the entire world. Doesn't matter whether they're in Tanzania or in San Francisco. And if they want to build an email feature into that app, good for them. It takes a week or two, right? Maybe a few hours. If they want to build a payments feature into that app, suddenly that just got insanely hard to do. And it really matters whether you're in Tanzania or San Francisco. I want to change that. I want to make it much easier to build and ship financial applications or financial capabilities, you know, embedded finance in every application. Um, and that's really what we are looking to do, which is a bit different, I think, than like kind of Libra's vision. Um, so it'll be fun. It is fun.
How is a lack of access for startups to the banking system? How has it been a problem, and does it remain a problem?
I mean, if you take that previous example and you look at that, you know, Tanzanian startup today, they're like, well, how do we let's say that they are like, we have a lot of customers in the US. How do we get access to the US payment system? All these customers have money in bank accounts. And then you're like, well, you need to go find a bank in the US, open an account with them, get them to give you access to ACH and cards. Cards is like, you know, the card rails really were built in kind of the 80s to 90s, and the ACH system hasn't changed since like 1973. So it is extremely outdated compared to any modern technology. But ultimately, once you get through all the hoops and the compliance hurdles and talking to bankers and everything else, the fact that the technology is extremely outdated is usually the least of your problems. That's something that a good technologist can figure out. You can write COBOL in a mainframe if you have to. The problem is if nobody ever gives you access to that mainframe, then what are you going to do? And so that probably will take 6 to 18 months to get that all figured out in the US. And after that, you only have another 211 countries to go. So, yeah.
What have you learned about the fintech industry? So not the banking industry, but just the fintech industry over the years working in it?
It is an amazing place, and it is in its infancy. There is so many startups out there that do things that I couldn't have imagined, that I thought were unimportant or trivial, or help customers in and do things which I could not have thought possible. Right, like it just blows my mind on a almost weekly basis, and I have a lot of experience too. I give you one example of a company called True Accord, which is a debt collection startup based in San Francisco, I think. The guy, the entrepreneur who runs it, the CEO, is a friend of mine called Ohad Samit. Truly, truly amazing and exceptional person, right? And you're like, there's nothing worse than sort of debt collection, right? Like, who likes to have the debt collectors come after them? And you can't imagine that anybody enjoys that experience. And yet, the people from whom or True Accord collects money actually give it a positive net promoter score rating, and actually rate True Accord higher than the kind of the banking industry. And that's just what? How is that possible? How can you collect money from people who are behind on their debts and do it in a way that they actually like you? This does not compute. And yet, True Accord has figured out a way of doing that. And is a very successful startup doing it, right? There is, so many, right? Like obviously Venmo, Cash App, companies like Aspiration, Simple, of course, still there, still running. Chime, TransferWise. I'm an investor in them, and the sort of the global network that they've built and the transparency they've brought to international money transfers is just amazing, right? And yet, I don't think they even have like 0.5% of the business globally, and they're already a unicorn doing tens of billions of dollars a year in payments, right? So yeah, it's amazing how many niches there are. But then it is, finance is one of the largest industries out there, and also one of the most antiquated.
You discussed how, well, you have a lot of experience with early stage fintech startups, and you discussed how a good technologist can overcome any sort of technological problems they face, that might be the least of a startup founder or a startup's worries. Could you kind of discuss those initial 3 years at Simple when you were getting partners and the trials and tribulations you faced? Or was it just very simple for you to get a lot of partners?
If it had been simple for me then to get a lot of partners, I wouldn't have spent 3 years doing it. So where to even begin, right? We went and we spoke to every bank that would talk to us, and everybody from like Citibank to like small banks in like Oklahoma or in Puerto Rico or wherever, right? And now 10 years later I have a much better framework for it, but back then I didn't. And most of the time people were happy to talk to us. Bankers love talking. People liked the idea and the vision. Nobody knew how to execute. Like people didn't understand like how do you build this. And then you realize most bankers are not technologists, and so they can't build a website or an app. They just buy their back end technology from one of three vendors, and then the vendors give them everything. So then we went and spoke to the vendors. The vendors couldn't figure out how to work with us because we weren't banks, and they sold to banks, right? Like so, when you're a third party, it's hard for for an industry to even figure out where to fit you in. Then we found banks in the prepaid space that actually knew how to do partnerships and get prepaid cards There was already Green Dot and NetSpend and those sorts of things. And we were excited. We were like, that's exactly what we need from a kind of an industry structure perspective, but not from a product perspective. Our product is a bank account for uh, middle income Americans. It's not a gift card, right? So we need to change that. And so we need to find a processor who can work with a bank partner and figure out how to change these few things at the bank and these few things at the processor and cobble that together, and off we go, right? And that took like 2 years. We had and several missteps. I like to say that we did everything wrong before we did it right. And it was just, we should have failed a dozen times in that process, but it was just a combination of luck and mostly insane determination to like pick yourself up after every failed deal, after every kind of like 6 months down the wrong rabbit hole. Well, reset back to square one, find another bank, find another processor. Let's try that again, and never give up. And that was really it, right? Like, you keep doing something long enough, either you'll succeed or you'll die trying. And we succeeded.
What years was this in?
2000, late 09 to middle of 2012. So I moved back to the US actually almost exactly 10 years ago. I think I landed late November or early December in Pittsburgh, moved my stuff to New York, and moved to New York kind of just before Christmas of 2009. And we were already working on trying to find a bank partner, and in the process, a lot of this was already in flight. But January 1st, 2010 is when officially was my first start date at Simple, and then that was all that I was doing, right?
So fast forward about 10 years later, what's the state of digital banking today?
Slightly better.
But not much better.
No, not much. I mean, most Americans still bank with a large traditional bank. Uh, Net promoter scores across the industry have increased, but a lot of it is just because people aren't worried about their banks going bust anymore. And the banks have built some new technology and shipped it. If after seeing Simple and Chime and Aspiration and Betterment and Wealthfront and Lending Club and 500 other startups do it right, some of them have actually figured out how to do at least some of it right. So the banking industry as a whole has gotten slightly better. Parts of it have gotten much, much better. And parts of it are slowly beginning to change fundamentally. But there's the thing, right? Like, US is a very, very large economy, and it's a very, very large industry. And so you can have companies growing like a weed for 5-7 years, and you're like, how come, why hasn't anything changed? And you're like, well, you can be doubling every year for 7 years. And it's just it's still nothing. And then suddenly, couple more times, and suddenly it's like, wait, Venmo is everywhere. What happened? And you're like, well, yeah, they were growing like a weed from 2010 till now. It's just suddenly in 2015 everybody noticed. Right? And that is the kind of the reality, right? So things have gotten better. There's a lot more financial applications. There's a lot more products. Hasn't changed the life of that many Americans yet. I don't know how many Americans have ever downloaded any fintech app on their phone, but I'll bet it's less than 50%, maybe less than 10%. So still a long, long way to go.
What's next for Sila?
Just keep growing and serving our customers. We launched, we have customers, we have lots of them, and we just need to, it's an API platform. They need to finish their coding. We need to help them through that process. They don't know what they don't know. We are the financial experts, and so we need to help them through that. And and we need to build more product and fix the issues with our existing product so that customers can get up to speed even quicker and code even quicker and ship even quicker, and just keep doing that for, say, another probably another 3 years, and then we will be an overnight success.
Well, thank you so much. We spoke today with Shamir Karkal, co-founder of Simple, and as well Sila. Thanks for your time today.
My pleasure, Justin.
Thank you.